The balance of power indicator summarizes bullish ability to raise price and the bearish ability to drop price. It provides an idea of how a past trend has moved and gives insight into the development of potential current and future trends. It essentially summarizes candlestick price action in a short-term context. If you're interested, you can research further details on the indicator's calculations. This lesson will focus on the various uses of the balance of power indicator, along with preferred conditions for its application, and cases where it fails and/or has limitations. A wide range of real chart examples will be covered from various time ranges. So regardless of when you watch this or which charts you choose to apply the balance of power indicator on, information from this series can be of use to you. It can be helpful to change the settings of how the balance of power indicator is displayed to histogram bars instead of the usual default line setting. This makes certain movements easier to see. And since the balance of power constantly changes between bearish and bullish, it can be helpful to use it in a short-term context when price could potentially break through a defined range. As price nears the top of this range, a more decisive break higher can be identified when price closes above the resistance line and the balance of power remains positive, realistically only for a short time. Because even with a strong break higher like this, it will be normal for volatility and slight selling pressure to emerge in the short term, even though price can still move higher. Though usually when the indicator goes back under zero, the strongest part of the initial breakout is normally over, and in the context of an uptrend, new neutral to bearish movement becomes more likely, especially if the balance of power can't get back into positive territory for at least a few bars in a row. Strong upswings or bullish retracements can be more easily identified when price continually closes higher, and the balance of power indicator shows a similar situation with several positive bars in a row. For the potential of a gap down fill, mark a short-term area of resistance near the gap down price, and as price arises to fill in the gap, we look for those same characteristics. A close over the short-term resistance line, which in this case is 1325, and this bullish move will be relatively strong as long as the indicator remains positive. Once values of the balance of power go back under zero, a bearish reversal is not imminent, but the strongest bullish part is definitely over. After that first bar back under zero, usually price will have hit some major resistance area. In this case, the gap has been filled, price is much more likely to go neutral to even slightly bearish, while at the same time, the indicator can constantly shift above and below zero. When a group of candles constantly overlap the same price range, especially at a well-defined support area, it can be treated like a small bullish reversal range, similar to what we saw at the beginning of this example. Again, we look for price to continually close over the upper boundary while the indicator remains at positive values. And as usual, the strongest part of the bullish breakout is over once values return back under zero. Then it's not much of a surprise that this takes place when price returns back to this major resistance area to halt the advance higher, with at least some short-term neutral movement. However, unlike the previous instances, there is a large breakout higher to continue the development of this uptrend further. This kind of breakout for a bullish continuation will display similar characteristics to what we've seen before. In this case, there's a small but significant difference when there's that first bar back under zero following the initial breakout higher. The uptrend doesn't weaken as much since it barely goes under zero and only happens for one bar. Even though the following few bars go back over zero and price continually closes higher, this small dip back under zero has an impact nonetheless. Naturally, steeper portions of a downtrend will more commonly take place when the balance of power indicator remains under zero. This will also usually be for a short duration that is best used when a clear resistance area is marked. These characteristics are especially apparent when there's a steady drop following a sharp peak, but as we know, balance of power frequently changes. In this case, extra attention is paid to whether price can get back over the previous high range from the highest price and highest closing price. Since previous highs are not being surpassed and the indicator is going back to negative territory, a substantial drop lower is more likely once price gets under the mid-44 range of support defined by the most recent upswing point, and can be sustained to some degree, as long as balance of power values remain under zero. But once the indicator returns back over zero, even for a short time and with relatively low values, the downtrend can pause or slow down as price becomes more range-bound, with no significant sustained balance of power for either the bearish or bullish side. Then, when there is a continuation lower, the steepest portion of the next drop will likely take place when the lower boundary of this flat area is broken through, and balance of power stays under zero for a short time. Just like with the short-term bullish reversal context we saw earlier in the previous example, candles that overlap a price range can also be considered a kind of bearish reversal formation. Then once price goes below the lowest area of this range and balance of power stays under zero, it's likely to be one of the steepest portions of the new downtrend, which will realistically last for a short time since balance of power quickly changes. And once there's at least one bar over zero, neutral to even bullish movement becomes more likely, and can lead to a significant stall of the downtrend, or even eventually a complete reversal. When there's a gap down and we're looking for a continuation lower, balance of power still might be constantly fluctuating. A more certain bearish continuation can be identified once price moves, and preferably closes under both the closing price and the lowest price of the initial gap down candle and remains under that range, along with balance of power remaining under zero. When there is a gap down candle, especially a green one, we want to see price go over and preferably close over the initial gap down candle's closing and high price. With a stable rise in price like this, balance of power will normally stay well above zero until the gap is filled. Then for the opposite situation with a gap up, this example shows a good start to an immediate gap fill since balance of power is below zero, and the current candle has closed under the gap up candle's low and closing price. But since balance of power isn't below zero for at least 3 bars in a row, there's no significant drop in price. Price remains relatively unchanged, and this is reflected with balance of power not showing any clear bullish or bearish advantage until there are these minor moves over the initial gap up price range. Then in the recent short-term context with price going towards more neutral to bearish movement, attention returns to the 360s, where naturally a gap fill is sustained once price closes under 360, and the balance of power stays under zero. It would appear the same thing is going to happen with the most recent gap up. However, a relatively quick return back over zero for the balance of power indicator delays a direct gap fill and naturally leads to more bullish to neutral movement. For more on indicators as well as Fibonacci methods, follow Ascencore. Thanks for watching and have a nice day.